Hello, everyone. Compliments of the season to you guys. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, the festive season is in the air already, and everyone is already gradually preparing for the end of the trading week. And of course, today promises to be an exciting one as we definitely going to be looking at rounding off of trading activities ahead of the weekend and of course the festive season, and this will definitely or most of the time bring in reversal setups that are likely going to incite a movement in the opposite direction of the price of the prior leading price action. And as a result of this, we will definitely want to be looking out for such setups while we review the current market structure this morning. Um, I'm so excited to be with you here this morning. Merry Christmas to you in advance. And of course, we have been monitoring three major financial assets on our watch list since the beginning of the week. And we've done fairly well this week after all, after the ups and downs and the roller coasters we witnessed during the course of the week. And today we are going to be doing a follow-up, rounding off also of this asset. And in fact, I have conducted a comprehensive analysis behind the scenes. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we will be managing our positions for today. Now, for those of you who are joining me for the first time, you highly welcome on board, and I'm very, very excited to have you around with us this morning. And I know that you will be wondering what this is all about and what is it that we really do here on the Forex Morning Mastery. Well, usually I share a couple of videos during the course of the weekend, which showcases the assets I will be monitoring for the week. And the Forex Morning Mastery was born out of the idea of doing follow-up details on all of these assets on my watch list. So as technical traders, we usually gather here on a daily basis, come together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. Now, the session usually kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, during which we come to review our position. So I encourage us all to stay tuned in so that you don't miss out on any of the valuable ideas we will be deliberating on today. Now, to top it all, my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and of course encourage you to engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar so that we can keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information, including timing of when to capitalize on the next potential move prior, during, and even after this economic event. Now, based on this asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Now, for today, Friday, December 22, the last trading day of the week, we have three high impactful events for today, of which two of them has already taken place, and that is from the United Kingdom economy docket. Now we have a mixed data here. The gross domestic product annualized for Q3 didn't do very well at all. It came in below expectation. Now, for those of us who don't know the importance of the GDP, or who does not even know what the GDP is all about, well, this is a key economic indicator representing the annualized percentage change in a country's economic performance. Now, this data represents the total value of all goods and services produced within the border of the United Kingdom. Now, the anticipation and, of course, the aftermath of this event usually significantly impacts the market sentiment, as it provides comprehensive view of economic health and growth in the particular economy we are talking about. Now, a higher than expected GDP growth often strengthens market confidence, leading to positive price action and, of course, potentially influencing central banks' decisions on interest rates. Now, this is why this is a very, very important event, as it gives us an insight into the expansion of the United Kingdom economy. Now, if we look at the previous data, it came in at 0.6% for the year on year, and there was no traction at all in the United Kingdom economy in the last quarter, that is the month on month. But one thing we saw here is how the data that came in this morning came in way, way below the previous data, and of course the expectations in this market, to further emphasize that there has been some contraction in the United Kingdom economy. Well, despite this data here, we still see a positive traction on the pound sterling. So we are going to be looking at the technical aspect of that in a moment. Then the retail sales data came in well. That came in beyond expectations here, and that was a very good one for the United Kingdom. Now, this is a measure that examines the average change in prices paid by consumer for goods and services during the last month. Now, it's also serving as an inflationary data, which tells us how well the inflationary status of the United Kingdom is. Now, a higher than expected figure is something positive, and I think the market participant are banking on this expansion to push price to the upside. So we're going to be looking at that in a moment. Then moving on, we are looking forward to the core personal consumption expenditure coming in from the United States, and of course this measures the average change over time in the prices paid by consumers for goods and services, excluding volatile foods and energy components. Now, anticipation of this data influences market sentiment, as it provides insights, very, very important, into inflationary pressures and the potential trajectory of interest rate. Now, we're at a crossroad as regards to the US economy right now, where we have this dichotomy between market participants who believe that there's going to be a rate cut, and there is another aspect of the market participant who are beginning to suspect that there is likely going to be another rate hike by next year. But the majority are leaning towards a rate cut by next year. But when it's going to happen is now the question. When is it going to happen? So as a result of this, the market is caught in a limbo right now. So we are going to be looking at how participants in US dominated asset will be anticipating this event, looking out for structures and patterns that we definitely want to be using to position ourselves in such a way that we can capitalize on the next move. And while we do this, we're also going to be taking into consideration the fact that today happens to be the last trading day of the week. And of course, everyone is gradually wrapping up and preparing for the festive period, which of course usually brings low liquidity in the market. So it is very likely a lot of people will be taking off some of their profit from the chart today. So we're going to be taking this into consideration as well. So with that being said, we will be diving right into the business, and as usual, we will be starting the day. So I will be opening up this chat while it loads up. I read the comment section. I can see your comment, Granddad. good morning to you. I think this is my first time hearing from you on the platform. I'm very glad to hear you. And you said, okay. Oh, I'm very glad that this session has been very, very helpful. And in fact, it brings a lot of joy to my heart that a lot of people are gaining insight from this daily dose of financial analysis. So I take that as a compliment and thank you very much for letting me know. So Kelechi, good morning to you. Compliments of the season to you too. And glad to have you around with us this morning. So our chat has finally loaded up, and the first asset we will be taking this morning is going to be the USOILSPOT. And what an interesting asset we have here. Remember, since the beginning of the week, majorly we have been buying this particular asset, though we had situations where we had selling opportunities as well. And of course, price action swinged back again to bullish expectations, as you will see in this particular market. And of course, this market influx has a lot of reasons behind the scenes which is affecting the market sentiment, hereby giving us a situation where in the last couple of days now the market has been a little bit choppy but still leaning towards the bullish expectations. Now, some of the reasons why this is happening is first of all, the geopolitical tensions in the Middle East have amplified concerns about the maritime security and global trade, especially after the Houthis attacked on ships in the Red Sea. Now, this event contributes significantly to the upward momentum in crude oil prices. And like I said yesterday, now most of the major shipping companies now are now taking a longer route to convey their goods to their destination, now avoiding the Red Sea. And what does that mean? The cost of transportation increases, which of course will dovetail on the prices of oil. And as a result of this could temporarily, let me say, disrupt the oil supply, the global oil supply at this point in time. So these are things that are likely going to be affecting the price, pushing the price of oil to the upside. Then adding to this complexity, we just had that Angola's recent decision to exit the OPEC Plus introduces another layer to evolving geopolitical landscape. Now, Angola is now is now amongst Ecuador and Qatar, who are already ex-members of the OPEC Plus. And we had the Angola's oil minister stating yesterday that the foresight of OPEC Plus does not line up with or does not support the interest of the Angola's economy. So as a result of this, they've moved out of OPEC Plus, and this for us is a sign that there is some turmoil. If the OPEC Plus member cannot settle that before they moved out, then there's some couple of issues brewing up within these members. Now, market participants at this juncture will likely place close attention to the release of Baker's US oil rig count data, which is coming up today, to have an idea of what is going on in the drilling industry, which is of course peculiar to the oil market. So we will look forward to that one and see how the market will anticipate this event. Now, looking at things from a technical standpoint, the week started with a very strong bullish momentum. Remember, we saw here at the beginning of the week where price action was initially confined within the range at the $72.50 level and the $71.96 area to emphasize the level of indecision at the beginning of the week. And with the situation here, you know how we do it. Whenever we identify a range like this, it tells us that there is a level of uncertainty going on in the market. Hence, we need to exercise patience and wait for either the breakout or breakdown of the support and resistance line to give us an opportunity to trade. Though we had an opportunity to sell at the beginning of the week, remember that price action did break down this support line and the ascending trend line around the $71.96 level to give us our first sell position for the week. And in fact, price moved about 100 pips before the bullish momentum started coming in. And of course, when price moves significantly like this, we move our stop losses accordingly, and we should be able to take at least 50 or a worst case scenario break even on that particular move. Then we saw the bullish momentum started, and with our buy stop order sitting above or around the resistance zone here, we capitalized on the first buy position for the week, and since that moment we have been buying this particular asset. So we saw about 200 pips move on that first one. Then we also capitalized on this one to right here, having like 3 or 4 positions in that regard, as we were able to scoop in close to 350 pips on the second position. And then on Wednesday's trading session, we saw another opportunity to buy, which of course did not last long, as we saw price move about another 80 pips. Then price again dropped yesterday, triggering our sell position, and we saw price also move about 120 pips before it snapped back into the entry point. And I can remember that I did give an update on my TradingView and Telegram platform that we should move our stop losses accordingly, and if you have done that, you must have taken some reasonable amount of profit on that sell position from yesterday. And as it is right now, it appears price action continues to find higher highs and higher lows in that regard. Now, there is one thing I want to call our attention to this current structure, which is going to be guiding our trading decision today, and that is the fact that price action has been bullish since when is that? Since last week Wednesday, and in fact we have an ascending trend line to buttress the strength of the buyers. And as it is right now, price action still remains above this ascending trend line, as you will see here. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we definitely want to maintain a bullish bias, hereby looking out for buy setup that we can take advantage of. Now, with the situation we have a couple of ascending trend lines here. We have the second one right here, so both of them will be serving as a key, as a yardstick to guide our trading decisions for today. Now, before I go into the details, I would like us to run through the 4 hours time frame quickly so that we can have an holistic perspective into what is really going on in this market before making an informed trading decision. So scaling up into the 4 hours time frame, we begin to see things very differently. And for those of you who are part of our live session on Monday, you will definitely be familiar with this particular structure. Now, one interesting thing here is the fact that price did break out of this descending trend line last week, and price has maintained that momentum to the upside, breaking out of our key level. Remember, we had our key level at the $72.50 level. We saw price retest it a couple of times, and since price has been continuing to the upside. Now, the highest level in the last 3 weeks now is the $75.30 area, which I will need price action to break out of to really feel comfortable that price will continue to the upside. So I'm waiting for the breakout of the $75.30, and if this happens, I want to have the opinion that this movement is going to be very, very massive. So scaling back down into the 1 hour time frame, how do we intend to position ourselves for the next move? Now, for the fact that price action still remains above our ascending trend line, and remember we have a level here. I did share this yesterday. We had a level at the $74.50 area, which has triggered a buy position, and price action in the last 4, 5, 6 hours has been oscillating just around that area, but we are yet to see a pattern formation. It's looking as if there's going to be a flag pattern or a pennant, or it could even turn out to be a double top structure, which is a reversal pattern. So we still wait for this pattern to form before confirming what is going to be happening here. But personally, I already have a buy position. We did mention this yesterday, as the $74.50 level was one of the levels we are looking out for buying opportunities. Now, if price continues to climb new highs, then a breakout of the $75.30 level will be welcoming more buy position. So we want to be marking out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is what we shall be looking out for buying opportunity today. As long as price remains above the $74.50 level, we feel comfortable in a buy position. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could also come in at any point in time, especially as we round off for the trading week, and of course preparation for the festive period, where definitely majority of market participants will be witnessing their holidays. And during the holidays, there are no activities leading to liquidity, and due to this liquidity, there is a high chance of spikes in price action, which of course brings some instability into the market, and majority of market participants will want to step aside and then wait for probably close to the end of the year, or probably the first day of the new year. So as a result of this, we might be seeing some profit-taking activities today. So that is why we need to also take into consideration the potentials that sellers can also come in as well. Now, if we are going to consider selling this asset today, what is it that we will see on this chart that will make us feel comfortable joining a sell bias? Now, for me to sell, of course, we definitely need this ascending trend line to be broken to the downside. Very, very important. As long as price still remains above the ascending trend line, we definitely want to maintain a bullish bias. But if price at any point in time today breaks down the ascending trend line, which for me shares a beautiful confluence with that same $73.70 level where we sold yesterday, then I will definitely be considering selling at that particular point in time, as we may likely see price action drop into the descending trend line we identified on the higher time frame, which was supporting the bearish momentum before it got broken last week Friday. So let's see how the market will play out around this area. The only condition that will make us sell is for the ascending trend line to be broken to the downside. Then we can start considering selling this asset. But as it is right now, we maintain a bullish bias, holding on to price action above the $74.50 level, and a buy stop order sitting above the $75.30 area to maximize the potential of this bullish move. So this is my simple view on the US Oil Spot for today. So I just encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions as regards to the setup, feel free to let me know in the comment section. And as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list for today. I see your comments here. Jonah Aruna, good morning to you. Aritabe, good morning to you too. Glad to have you around with us. Hello, Princess Abolokwe, good morning to you. It's been a while since I heard from you. Trust you are doing very well, and compliments of the season to everyone in the house. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list of this morning is the GBPUSD, and on the GBPUSD we have done fairly well since the beginning of the week. We have gone through the phases of buys and also sells as well, and on both instances, though our first sell position at the beginning of the week did not really do well, we were taken out at break even after price action moved over 30 pips in our favor. Remember that at the beginning of the week we had this range identified where price action was confined within the 1.2700 level and the 1.26650 area, to emphasize the level of indecision during the first 13 to 15 hours of the new week, before we finally saw price action break down the support line here at the 1.26650 area to trigger our first sell position for the week. And in fact, price did move about 35 pips in our favor, and of course we did move our stop loss accordingly, and we would have been taken out of that position at a worst case scenario break even. Then we saw price action climb back above the 1.2665, which of course I did updated us on my public platforms, TradingView and Telegram platform, that we shall capitalize on the breakout retest of the structure, which actually happened. Then we maximized the potential of this bullish move, broke out of the 1.27, and of course the breakout of the 1.27350, amassing about 80 to 100 pips thereabouts before the bearish momentum came in, which was considered to be a retracement phase of the impulse leg that happened at the beginning of the week. And of course, we did know that price action was trading just exactly around our potential demand zone, which was situated around this area, as we saw that as soon as price action got into the between the 50 and the 61.8% retracement of the impulse leg that started last week. Okay, let me show you quickly for the sake of those who are joining us for the first time. So this is what we saw here at the beginning of the week. We saw this impulsive move all the way into the 1.280 area, and we considered the bearish momentum that started on Friday, that is last week Friday, as a retracement. So what we did was to bring out our Fibonacci retracement tool just to project where the retracement phase will end before the next wave of bullish momentum will happen. So we ran the Fibonacci retracement tool all the way through the impulse leg, and we aimed at that area between the 50 and the 78.6% of that impulsive leg to look out for reversal setups or buy pressure that supports the idea of the uptrend continuation. And this was exactly what happened. On Tuesday, we saw price come into that area between the 50 and the 61.8% of that impulse leg, which was exactly around the 1.26300 area. And one interesting thing we noticed there is that sellers were finding it difficult to continue the momentum to the downside. As you will see here, we saw buy pressure here, negating all attempt by the sellers to break through that structure. We also saw the same thing happen here on Wednesday's trading session, and in fact this continued throughout Wednesday's trading session. As you will see here, continued buy pressure, negating all attempt by the sellers to break through that structure. Now on Thursday, we saw how despite a strong bearish momentum to break through, buyers still maintain their stance and push price to the upside here. And as a result of this observation, we did agree here yesterday that we shall be looking out for buying opportunities at the breakout of the 1.26500 level, as you will see here. And in fact, price did break out of that structure with an engulfing bullish candle. And in fact, we saw, if you had missed out on that opportunity, the market came back multiple times to retest the structure to incite that uptrend continuation. And remember that we said we will be adding more positions at key levels such as the 1.266500 level. And of course, we also added one more at the breakout of the 1.2700 level. So in the last 24 hours, we have 3 buy positions running at this particular point in time. And as you will see here, let's see how many pips in total we have running. So the first position is running with about 50 pips in profit, while the second position is running with about 36 pips. That's close to 90 pips. And the third position is still somewhere around the entry zone with about 2 pips running in profit at this point in time. So kudos to everyone who capitalized on this opportunity. And of course, you know how we do it. As soon as price moves significantly well in our favor, the next thing we want to be doing is to ensure that we secure all the current buy positions we have here, especially on a last trading day like this, which is likely going to be coming in with some volatility as a result of rounding off of trading activities ahead of the festive period. Now, with the situation here, it is very, very important that we give enough breathing space. So anywhere below the 1.26800 area seems most appropriate to secure all current buy positions, and let's see how far this momentum will go. So at this point in time, I still maintain a bullish bias, still looking out for more buying opportunities, and if price continues to climb new highs, a breakout of the 1.27350 will welcome more buy positions. So in fact, I already have a buy stop order above that structure to maximize the potential of this bullish move. So let's see how the market will play out here. So personally, I hold on to a bullish bias at this juncture, and I'm not going to be selling, like I said yesterday, unless price break down this ascending trend line we spotted on the higher time frame. Now, for those of you who had not watched my video on the GBPUSD, please do, as you will get to understand how important this ascending trend line is from the higher time frames perspective. So I maintain a bullish bias here. I'm not considering any selling positions on this one, and let's see how price action plays out. And of course, I will definitely give you updates on both my TradingView and Telegram platform as at when due. So these are my views on the GBPUSD for today. So I just encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever as regards to this current setup, or you need some clarification at some point, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the last asset on our watch list. And if you have found this content and session helpful in making your independent trading decisions, kindly support the project by clicking on the like button. This is the only way you can support this channel, so I will really be grateful as you do so, as your likes also will support the algorithm in pushing the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. So I look forward to your questions, and if you have any, so I'll take the next 10 to 15 seconds and see if there are any before we move on to the next asset. I see your comment here, Prince Divine. Good morning to you, Prince Divine. Trust you're doing very well. Compliments of the season. Prince says here that I tried joining your Telegram channel, but it isn't going through. I don't know if you can send the link again. Okay, it's quite easy. Okay, you can just check the narrative scrolling at the bottom of your screen right now. Just check the narrative scrolling in with a pink background. You will see my Telegram channel right there is trading with Master Sheriff. So you will see it right at the bottom of your screen, trading with Master Sheriff. Just type that into your Telegram search menu, and it will definitely give you it will reveal my Telegram channel. Okay, so I hope that is helpful, Prince Divine, and I look forward to hearing from you after you've done so. Thank you very much. So in the absence of no questions, I hope you've clicked on the like button, guys. All right, so in the absence of no questions, let's move on to the next asset on our watch list. And the next and final asset on our watch list for today is going to be my favorite, of course, and that is the XAUUSD, which has done phenomenally well since the beginning of the week, as we have been able to scoop in over close to 600 pips on this particular asset this week, as we have continued to buy this asset. As you will see, price had consistently respected that ascending trend line we spotted at the beginning of the week, and at no point in time did we see price drop below the structure, hereby negating the idea of even consider selling this particular asset. So it has been a very tremendously profitable week for us all in this community. Now, as it is right now, we currently maintain a minimum of 4 buy positions, securing over 300 pips in profit on this one. Remember, we had this one right here. We bought right here yesterday. For those of us who are part of the XAUUSD live window during the New York session yesterday, we bought together around this area. We added a gain around the $2,038.50 level, after which we saw some level of volatility happen around that area, lasting for about 2 to 3 hours before the momentum began again. And during the Asian session, we saw triggers again. We saw another one at the 2043 and the $2,047 area to give us a minimum of 4 positions running in profit at this particular point in time. And well done, and kudos to everyone who capitalized on this buy opportunity. Remember also, we bought at the beginning of the week at the breakout of the $2,024.80 area. Remember, we also had it again at the breakout of the 2030. Then we had it at the 2035, and one more at the breakout of the 2043, which never lasted long before the bearish momentum came in. And on that one, we scooped in over 200 pips on that one. So we did very, very well on the XAUUSD for this week, which has come out to be a phenomenal week for us all. And once again, congratulations to everyone who has been part of this profitable journey. Now, during the Asian session, we begin to see some choppy situation go on between the $2,053 level and, of course, the $2,047 area, to emphasize the level of indecision at that particular point in time. And of course, this was in response to the moderate uptick in the US dollar during that particular period of time, which also affected the US Treasury bond yield as well. And at this point, it is very, very important that we move all our stop losses accordingly. Sincerely, I did not mention that earlier. So very, very important. I will be suggesting that anywhere around or below the $2,047 area seems most appropriate to move all stop losses to, as we anticipate the core PCE data coming up later today, which of course is going to be giving us an insight into the inflationary situation in the United States, which of course is definitely going to be inciting the potential trajectory of interest rates in the nearest future. And like I said earlier, that we have a situation in the market where market participants are uncertain about when the Fed will begin cutting interest rate in 2024, hence the consolidation phase we have noticed on this chart. And as a result, attention will remain focused on the core PCE index, which will influence the Fed's future policy decision and provide a new directional impetus to the price of gold. But as it is right now, sincerely, I still maintain a bullish bias considering all the geopolitical tensions going on in the Middle East. And when we have this kind of tensions, the investors prefer to move their funds from currency assets into safe haven assets such as the gold. And as a result of this idea, we maintain a bullish bias. However, if we look at things from a technical standpoint as well, you will see that everything is still screaming bullish at this point in time. Now, remember, yesterday, no, I think on Tuesday, we acknowledged an uptrend continuation pattern on the chart right here after taking into consideration this impulsive move where we saw something like a pennant, or you may call it a flag pattern depending on from what perspective you're looking at this from. And usually when we have a pennant like this, we expect price to break out of the resistance line of that pennant to give us another opportunity to buy, which we did take advantage of at exactly the breakout of our key level at the $2,030 mark, as you will see right here. And since that moment, we have been buying this particular asset. Now, in addition to this, we have an ascending trend line which has been uniformly and consistently respected since last week Friday, as you will see. So in the last 1 week, the momentum has been very bullish and it's looking very promising to form new highs at this point in time. So as a result of this one, I have a buy stop order sitting above the $2,053 area. Let me zoom in so you can see things clearly. So I have another buy stop order above the $2,053 area, looking forward to adding more buy positions if price action ever breaks out of that structure. So we continue to hold on to a bullish bias here. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. Remember, today is the last trading day of the week and market participants may be doing rounding off trading activities ahead of the festive period. And as a result of this, we could see some profit-taking activity. It's very, very possible. So we want to keep a balanced perspective to this market. Now, if you look at when price tested the $2,053 area, which happens to be the highest point for this week, we saw some selling pressure resume around that area. And right now, price action is gradually approaching that level. Will it break out of the level, or is there a chance that that level will become a barrier again for buyers to push price to the downside? And in fact, if price action retest that level, that is selling pressure begins again from that area, a breakdown of the 2047 could see price retrace maybe back into this ascending trend line before another wave of bullish momentum will happen, or even break it down to the downside to incite a massive sell-off to the downside. So in that regard, we could still see some counter trend opportunities here, but personally, I wouldn't be taking that trade at all. Let me see how many pips that is. That's about a minimum of 65 pips, which doesn't make any sense for me to risk on this particular trade. But if you're a scalper or a counter trend trader, you feel comfortable taking counter trend opportunities, you might as well take advantage of the breakdown retest of the 2047. But for me, I would wait to see how price action would react to that ascending trend line before making any decision if ever price action breaks down the 2047 level. So if price comes here and begins to find buy pressure or transitions into a reversal pattern, let's say a double bottom structure, then I will be looking out for buying opportunities from here. However, if price drops, breaks down, retests the ascending trend line, definitely this will be welcoming selling ideas. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. But one thing important here is, for me, I doubt if price will break down the 2047 level for today, as price is likely going to continue to find new highs. But if it does break down the 2047, we do want to be on standby to capitalize on that move. So this is my personal view on the XAUUSD for today. I hope I made myself very, very clear. And in fact, if you have any questions whatsoever as regards to the setup or any of the setups we talked about today, feel free to let me know in the comment section. And please don't forget, support the project. Click on the like button. Your likes are very valuable to me, as it helps the algorithm promote the video to a wider audience of traders, which also will definitely allow the community to grow as well. So I appreciate everyone for doing that. So while I wait to see if there are any questions, I want to state here that we're already going into the festive period, and in fact I'm planning to travel with the family for vacation, and I will not be around this weekend and as a result of this, I might not be doing any videos. Well, it depends on what happens during my journey, and if anything, if I have the time. But personally, let me tell you, I usually don't trade on the last week of the end of the year. I usually don't trade, and the reason is simply because of the fact that because it's a festive period, most key players in the market will be stepping aside from the market, and as a result of this, there is likely going to be a low liquidity, and when there is low liquidity, there is always this tendency for volatile price movement, spikes, and this may likely not be in alignment with our strategy or analytical approach. So as a result of this, I will stay clear of the market for the first 3 days of next week, after which, if there is anything important, I can do a Forex Morning Mastery, but I will definitely give you updates on my Telegram platform and of course on the YouTube channel here for us to see. So pending the time that happens, I look forward to seeing you guys during the XAUUSD live window later today. I already shared the link in the description in the comment box pinned at the top. So you want to click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those who don't know, the XAUUSD live window is a platform born out of popular demand from members in this community, where we come together to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading activities for that day. So let's see how this will play out. And I can see Chike Ikuka, good morning to you, Chike. Compliments of the season. Please, oil is my favorite and I missed it. Can you retouch the key points again if you don't mind? Okay, if you had missed it, don't worry, you'll still see the video on my channel. So as soon as I end this video, you will have access to the replay, and just stay tuned in till the end, and once the video ends, you have access to the replay and you can watch it all over again. All right, Chike, glad to have you around with us this morning. So on this note, we were able to attend to three major assets which we have been monitoring since the beginning of the week, which includes the XAUUSD, the GBPUSD, and of course the USOILSPOT, all of which we were able to identify simple trading setups that we will be using to guide our independent trading decisions for today. So I do hope we mark out these levels on our chart, and if you do, please exercise patience and allow the structures to mature before you jump into any position. Then for those who are joining us for the first time, I really appreciate you, and I do hope you are able to gain one or two things from this session. And if you really did, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather in this community to make your own independent trading decisions. And also, to everyone, remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So as a result of this idea, please ensure you have a well-defined risk management strategy as you want to adopt and being consistent with it throughout the course of your trades. On this note, I would like to wish us all the best of luck. I see a couple of comments here. Princess Abulokwe, God bless you too. Thank you very much. I take that as a compliment, and do have a wonderful holidays too. Hello, Kelechi says, all right. All right. Okay. Thank you very much. Thanks for the permission. And I look forward to seeing more of you, maybe next week or probably at the beginning of the new year. So I wish us all the best of luck today. Trade smart, trade consciously. Do have a wonderful weekend, wonderful holiday, and Merry Christmas and Happy New Year in advance. Bye-bye.